Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial world's secret handshakes and whispered deals. Today we're diving into a filing from Belpointe Prep LLC. Now this isn't your typical deep dive into a quarter's earnings. Instead, it is about a specific deal, a real estate shuffle, and how it might play out for the company and its investors. Before we get into the nitty-gritty, if you like your corporate news unfiltered and easy to understand, make sure you hit that subscribe button. And hey, we've got a thriving community over on Discord, linked in the description, where we break down these kinds of filings and more. So what we have here is a Form 8. This is like a special bulletin from a company telling everyone about important events that aren't part of the regular reporting cycle. Think of it as an urgent announcement for the stock market. This filing is all about transparency, which is supposed to be the bedrock of our financial markets, ensuring everyone has the same crucial information at the same time. The big event happened on the 6th of January, but the report itself is dated the 12th of January 2026. This tells us when the company started acting on this new deal. Our main player here is Belpointe Prep LLC. This is the company whose name is on the report. It is incorporated in Delaware, and it has a commission file number along with an IRS employer identification number. These are just official identifiers like a company's social security number. Now, what is the actual story behind this 8? It's all about a deal, a significant agreement that the company has entered into. This is the core of the filing today. On the 6th of January of 2026, Belpointe Prep and a subsidiary it controls called Tokeniki Partners made an agreement with a person named Daniel Swatsy. This is called a letter agreement. It sounds pretty straightforward, but the details are what matter. So, Mr. Swatsy is giving up his stake in a piece of real estate in Connecticut. He is transferring it to Tokeniki Partners, the company's subsidiary. What does he get in return? He receives 243,000 special units called Class B units in Tokeniki Partners. Think of this as an ownership stake in that real estate subsidiary. Now, here's where it gets interesting for investors. Mr. Swatsy has what is called a put right. This means that between January 2026 and May 2027, he can decide to sell these Tokeniki units back to Belpointe Prep or someone connected to Belpointe Prep. He just has to give them official notice, a put notice, saying how many units he wants to sell and how much will Belpointe Prep have to pay. It is $14.5 for each Tokeniki unit. But here is the twist. They won't pay in cash, they'll pay in Belpointe Prep's own Class A units. The price for these Class A units will be based on the market price of those units on the NYSE American Exchange right before Mr. Swatsy gives his notice. So if the stock price is high when he decides to sell, he gets more company shares. If it is low, he gets fewer. This is a way for the company to manage its cash flow. There is also a condition here. If Tokeniki Partners doesn't manage to raise money through its first big equity funding round before this selling period ends, the selling period gets extended. It can be revived for another 30 days after that funding round happens. This suggests the company might be relying on this deal to help solidify its financial situation before it is obligated to buy back those units. But that is not all. After Mr. Swatsy's selling window closes, the company through its manager Tokeniki Manager gets its own option. This is called a call right. From June to December 2027, Tokeniki Manager can force Mr. Swatsy to sell them his Tokeniki units. Again, the price is $14.5 per unit, and it will be paid in Belpointe Prep's Class A units valued at the market price. Just like with the put option, if Tokeniki Partners hasn't had its initial big funding round by the time this call period ends, it also gets extended for another 30 days after that funding happens. This shows a clear connection between this real estate deal and the company's ability to secure significant investment. Finally, Belpointe Prep is agreeing to register the Class A units it might issue to Mr. Swatsy. This means they'll make sure those shares can be legally sold on the market, and they'll keep that registration active for a good while, either until Mr. Swatsy can sell freely under certain rules, or for 30 months. This is important because it ensures Mr. Swatsy can actually sell the shares he receives and get value from the deal. Now, let's quickly look at the exhibits which are attachments to this report. The main exhibit here is the letter agreement itself, dated the 6th of January 2026. This is the document that lays out all the terms we just discussed. And then there is the interactive data file, which is standard for these filings, allowing for easier data analysis. Lastly, we have the signatures. This confirms that Belpointe Prep LLC is officially signing off on this report, and it is signed by Brandon E. Lakoff, who holds important roles as chairman of the board and chief executive officer. So, what does all this mean for Belpointe Prep LLC? This filing tells a story about the company acquiring a real estate asset indirectly through its subsidiary. Mr. Swatsea seems to be getting a stake in a potentially growing business in exchange for his property. The put and call options give Mr. Swatsea a way to exit his investment, and the company a way to manage its ownership structure. The key here is how this transaction is linked to the company's ability to raise capital through initial equity financing. If that financing doesn't happen, the timelines for these options get extended, which could put more pressure on the company later. The fact that they are paying Mr. Swatsea in their own class of units at a market-driven price is a common strategy to conserve cash. However, it also means that if the stock price is low when these options are exercised, Mr. Swatsea might end up with a lot more shares, diluting the ownership of existing shareholders. Conversely, if the stock performs well, he is rewarded with valuable equity. The company is essentially using a real estate asset to potentially bolster its capital structure and bring in a new shareholder. The success of this deal hinges heavily on Tokeneki Partners securing its first equity financing. If that doesn't happen, the company might find itself obligated to repurchase these units under less favourable terms, or at a time when its own cash position is weak. Looking at the broader picture, this deal suggests Belpointe Prep is actively managing its assets and seeking to integrate new contributions into its operational structure. The reliance on future equity financing is a significant risk factor to watch. Investors should focus on whether the company can successfully close its initial financing round, as this will be a major determinant of the outcome of these put and call options. The company's direction appears to be growth through asset acquisition and strategic partnerships, but this path is clearly tied to its ability to attract further investment. A key opportunity lies in leveraging the real estate asset for future growth and revenue generation. Conversely, a major risk is the potential dilution of existing shareholders if the company's stock price is low during the exercise of these options, or if the needed equity financing fails to materialize. In conclusion, this filing is less about current financial performance and more about a strategic move that sets up future financial obligations and opportunities. The company is betting on its ability to secure funding to make this deal work smoothly. Alright, that is our breakdown of Belpointe Prep's 8K filing. What is your take on this real estate deal? And these put and call options, do you think it is a smart move for the company? Drop your thoughts in the comments below. If you found this analysis valuable, please hit that like button, it really helps us out. And if you want more deep dives into corporate financial documents like this, make sure you subscribe. Don't forget to join our Discord community, linked in the description, to keep the conversation going. Thanks for watching, and we'll see you in the next video.